Welcome you back to my YouTube channel. Understanding currency pairs and codes in forex trading. Major currencies, minor currencies, exotic currencies. I'm going to open your eyes to what we mean by major currencies and what we mean by the minor currency and what we mean by the exotic currency. In forex trading, currencies are always traded in pairs. Pairs, that means the major against the minor. It's not just one currency. Is the major against minor. Euro slash USD, USD slash JPY, and many more. So this fundamental concept means you are buying one currency while simultaneously you are selling another. Understanding how currency pairs are and quotes work is essential for beginners aiming to navigate the forex market successfully. This video will break down what currency pairs are, how to read their codes, and explain the different categories, major, minor, and exotic pairs. Now, let me start with number one. What are currency pairs? A currency pair consists of two currencies quoted together, representing how much of the second currency called the quote currency is needed to buy 1 unit of the first currency called the base currency. So if you have Euro slash USD, Euro is the base currency, while USD is the quote currency. The format is usually written with a slash, separating the two currencies such as Euro slash USD or GBP slash JPY. Now, let me tell you what I mean by the base currency. The currency on the left side of the pair is what is referred to as the base currency. And the base currency is it is the currency you are buying or the currency you are selling. So when you are buying up, it is the base currency you are buying up. When you are selling down, it is the base currency you are selling down. So if you are clicking that buy, it is the base currency you are buying. So if you have Euro USD and you are buying Euro. And as you are buying Euro, you are selling USD. If you have Euro USD and you are selling, what you are selling is Euro and what you are buying is USD. Now, let's talk about the quote currency. The currency on the right side of the pair is what you refer to as the quote currency. It tells you how much of this currency you need to buy 1 unit of the base currency. For example, if the Euro USD pair is quoted at 1.2000, it means 1 euro costs 1.2 US dollars. If you buy the Euro USD pair, you are buying euros and selling US dollars. If you sell the pair, you are selling euros and buying US dollars. Now, here is how to read currency quotes. Currency quote consists of two prices. We have the bid price, which is the first one. The price at which the market or your broker is willing to buy the base currency in exchange for the quote currency, that is the bid price. This is the price you sell at. Then we also have what is referred to as the ask price. This is the price at which the market or your broker will sell the base currency for the quote currency. This is the price you buy at. Now, the difference between the bid and the ask price is called the spread, which is effectively the cost of trading and how brokers make money in most cases. So that difference, when you place a trade, there's a difference. No matter what you do, there is going to be a minus when you first place a trade. And that is why when you start trading, you should have a long-term view. Well, that will determine on the type of trader you are when you start trading, whether you are going to be a scalper or a day trader or any other kind of trader, a long-term trader or any other type of trader that you want to be. For example, for instance, if the GBP USD has a bid price of 1.3 and an ask price of 1.3002, the spread is a difference, which is 0.002 or 2 pips. A pip is the smallest price move, usually the 4th decimal place in most pairs. You could sell GBP at 1.3 or buy it at 1.3002. Now, what are the types of currency pairs? Currency pairs are generally classified into 3 main groups based on their liquidity, trading volume, and the countries they represent. we have the number one, major currency pairs. Major pairs always include the US dollar and one other major currency. These pairs are the most traded and liquid, making them attractive for beginners due to higher or tighter spreads and smaller price volatility. Examples include Euro USD, that is Euro and US dollar. GBP USD, which is British Pound stroke US dollar. We also have the USD JPY, which is US dollar Japanese yen. We also have AUD USD, which is Australian dollar against US dollar. All these are major currency pairs. Then we have the USD CAD, USD CAD, which is US dollar stroke Canadian dollar. Then we have the NZD USD, which is New Zealand dollar against the US dollar. We also have the USD CHF, which is US dollar against the Swiss franc. So any dollar, any currency that is paired with US dollar, in that pair, that is a major currency or major pair. Because the US dollar is involved in nearly 90% of all forex transactions, major pairs represent the art of forex trading with high liquidity and market transparency. Number two types of currency pairs are the minor currency pairs, and these are called cross-currency pairs. Minor pairs are those that do not include the US dollar but include other major currencies. These pairs are less liquid than majors but still widely traded. Examples include number one, Euro GBP, that is Euro British Pound, Euro AUD, that is Euro Australian dollar, GBP JPY, that is British Pound Japanese yen. Then we also have the AUD JPY, which is Australian dollar stroke Japanese yen. We also have the Euro CAD, Euro stroke Canadian dollar. Minor pairs often have wider spread and can be more volatile because they generally trade less volume than major pairs. Now, the third type of currency pairs are exotic currency pairs. Exotic pairs combine a major currency with the currency of a developing or smaller economy. These pairs have lower liquidity, wider spreads, and higher volatility, making them riskier but potentially more rewarding for speculative traders. Examples include USD ZAR, that is US dollar South African rand, GBP TRY, that is British pound Turkish lira, USD THB, that is US dollar Thai baht, these are exotic currencies. We also have Euro TRY, which is Euro Turkish lira. We also have AUD MXN, which is Australian dollar Mexican peso. Exotic pairs are influenced heavily by economic and political factors affecting the smaller economy. In summary, currency pairs show how much of the quote currency you need to buy 1 unit of the base currency. The bid price is the selling price and the ask price is the buying price. Their difference is the spread, which is what goes to the broker. So the more trade you open, the more spread, so the more money the broker makes. Now, some people have said that is why brokers encourage you to open a lot of trades, and traders like scalpers because scalpers open a lot of trades. In a day, they can open 20 trades, whereas some people who are long-term traders can open 2 trades in a month, whereas scalpers can open 100 trades in a month. So they make more money from the scalpers than from you that hold it long-term. Now, major pairs always contain the US dollar, and they represent the most liquid and the widely traded pairs. Minor pairs exclude the US dollar but involve other major currencies and have moderate liquidity. Exotic pairs, on the other hand, combine a major currency with a currency from a developing economy, offering higher risk and potential reward at the same time. Understanding the currency pairs and how to read quotes is fundamental and foundational for anyone starting to trade Forex. as it affects how trades are executed and how profits and losses are calculated. This is I'm going to stop in this video at this time. I'm going to see you in the next one where I'm going to talk about another fundamental concept of Forex for beginners. And what we're going to talk about next is what moves the Forex market. Key factors that move the Forex market. Until I come your way in the next one, please subscribe to this YouTube channel, like this video, share a link of this video with your family and friends, and let me know in the comment section the city where you're watching from. Are you watching from Lagos, from Port Harcourt, from Abuja, from Ilorin, from Nigeria, from Nepal, from USA, from Canada, or from UK, or from anywhere in the world? Let me know in the comment section below. The link to the broker I use in Nigeria, I will leave it in the description section, and they have branches all over the world. Use that link to register with them, and you are going to be glad to do. Until I come your way in the next one, let's go ahead and watch this video. In the next one, remember, I'll be talking to you about what moves the market, so don't miss that video. Please watch this video now as to prepare for the next one. See you in the next one.